Next up, we have a very exciting keynote, the State of the Union for Fintech, presented by Micky Malka, who is an entrepreneur by design and investor at heart. He is the founder and general partner of Ribbit Capital, a venture capital firm based in California. He's focused on leveraging technology to disrupt financial services. Some of the companies he's invested in are in other than Razorpay, include Cred and Coinbase. If there's one thing that matters to him the most, it's user experience. So without further ado, let's welcome on stage Micky Malka as he shares a global view on the current state of fintech across the world.
Thank you, Canon. It's good to be here at FTX with Razorpay and the whole team. Good evening from California. Good afternoon in India. So I wanted to share with all of you a little bit of view of what we see around the world. It's night here, so it's a little bit dark, but I'm going to share my screen and go into a presentation and give you a sense. So here we go. We're trying to get this to work. Give me 1 second. I want to make sure you all see my screen right now. Is there any way to get feedback that people are seeing my screen? So in a very Star Wars analogy, I don't know how many of you are fans of Star Wars, but we are very big fans of Star Wars at Ribbit. And the way we see it is that the Death Star, the Empire, is the big on the left side here, and the rebels are the fintech companies. And worldwide, we are fighting for a $15 trillion market cap. And over the last few years, these rebels on the right have been growing and grabbing more and more of that market share. As a matter of fact, in the last year, they grew and took over $1 trillion of market cap from the incumbents. Now, when you think of that, this is moving really, really, really fast. And more rebels are joining the battle against the incumbent players. Now, this year, 2020 has been very different. We had something come up that we never expected. It was a form of an asteroid or a virus. And what that did to all of us is that it just simply accelerated all the changes that are going on. So in the very Star Wars analogy, that's the way we think here at Ribbit, there are three players going and battling for a $16 trillion market cap. You have the incumbents, which are very represented by the banks and insurance companies and all the traditional players that we have gotten to know over the years. There is big tech fighting and trying to make a space in this. And there are the challengers and all the rebels, Razorpay included, that are trying to build a new brand in a category. Now, these three participants, if you think about 2020, now that we're coming to a close, the challengers have won this year. They took a lot of ground for the incumbents. On this slide, you can clearly see that if you add up the market cap of banks against the challengers, what the leading banks lost in market cap, the challengers won in market cap. So clearly, net to net, this year has been a good year for fintech and for challenger players worldwide. Now, the tech major companies have not stayed asleep on the wheel. They've been busy, particularly in India, as you all have seen this year, from the Facebooks and the Googles and everybody else investing into geo platforms and trying to make it work. But also around the world, we've seen the same phenomenon over and over in some of the big markets. So the big tech companies have been trying to play this game in their own strategy, which is right now to invest into other companies. Now, as the year started, if you look at the slide on the left, we had an amazing amount of M&A activity early in the year. Jan and February, we were hitting record heights of M&A activity worldwide. And then suddenly COVID came and it really slowed down. There were blips and ups and downs during the quarters, but nothing compared to the first 60 days of the years. We were expecting a massive number of deals this year. And because of COVID, they got delayed, which has made them, a lot of these companies, much bigger worldwide. In early stage, it's moving. We think at Ribbit, we think that we've hit the peak of the first wave of some of the fintech companies. Anything that was considered to be mobile, cloud-enabled, has already been started in the terms of what it needs to get scale. We've seen this overall worldwide, in Europe, in the US. It's a global phenomenon that we see clearly happening. And it's the same that we see in India. The number of early stage fintech companies has been declining over the last few months or year. And the number of dollars it's still moving. The number of major deals in the region is growing in the onward deals, but the first wave, it's clearly come and pass, and we're ready for what we call the second wave of fintech, which I'm gonna go into a little bit more details. Now, private fintech worldwide has had a phenomenal year. If you look at the number of deals around the world that have raised more than $150 million per round, you have seen that increase by over 60% year over year. More than $15 billion have been invested into fintech companies in these rounds. And here's just a snapshot of them worldwide. More importantly, and what is making a big effect in the market, is that public markets are paying big for fintech. Now, here's a slide on the multiples of what companies that are worth in the private market compared to the public markets in payments, in insurance, in investments, in home finance, and buy now, pay later, which is a trend that we're seeing clearly now, right now, going public. Those companies are being very well received by the public markets compared to private markets. So the public markets, retail customers, and institutional funds are willing to bet much more on the growth of these companies. And what does it mean? Well, it means that IPOs are surpassing PRICs. We are seeing an all-time high in the number of IPOs that are being raised worldwide for fintech companies. And our wish and our desire is to see many Indian fintech companies go public over the next couple of years following this trend. But here on the right, Upstart just came out public this week. As you can see, Affirm, one of our portfolio companies, coming out in the next few weeks. Robinhood just announced. Coinbase just announced. Marqeta is talking about it, but it's just a consistent number of companies that are coming out public in the fintech markets because the demand worldwide for this asset in the middle of COVID has been insane. Now, what are the trends that we're seeing? We're seeing three very clear trends. The first one is cashless, and you in India have seen this more than anybody else with UPI, and we're going to dive a little bit into it. Second is digital first. All of these platforms that are becoming first to serve the digital world equally to the physical world, and then what we call the decentralized world, which is something that we think is a trend that we have to follow this decade. On the cashless side, the amount of dollars worldwide or paper bills is shrinking really rapidly. No one is circulating with dollars. There's a scarcity of coins in America and Europe. In India, you had the RBI governor come online requesting citizens to use digital payments. UPI's transaction volume growing month over month, hitting record highs over the last 5 to 6 months in a row. Cash App and Venmo app in the US, Mercado Pago in Latin America, Google Pay and Phone Pay in India, Shopee in Southeast Asia. You are seeing definitely the growth month over month of people using mobile wallets. And this is a trend that will not go away. People will not go back to trading cash after seeing the simplicity and the easiness of trading and using mobile wallets. Now, online payments are growing because of it. The more wallets people are using, the more payments that people are using. And the incumbents in America, companies like FIS and Fiserv, have seen their revenue growth be shrink, while online fintech companies that are cheaper, Remitly, just examples of remittances businesses, are growing much rapid than any other time in their history. And it means that the more mobile wallets and the more online payments, the more e-commerce. E-commerce has accelerated 5 years in the last 6 months. There's no mistake. There's no way around it. In America, in the UK, in Brazil, in India, the numbers are very clear. People are getting very comfortable about buying online. And buying online doesn't just mean buying your toilet paper anymore. In places like China, companies like Becky or KE are just insanely building user experiences where you can buy and tour your home to buy an apartment completely from your phone. Carvana on the used car marketplace. Alan on health care insurance in France. Wherever you go in the world, purchasing cars or homes or health services is becoming a mainstream services that you can do completely from your phone. And what this is happening is that it's making even small businesses buy more online. These are examples of people buying insurance online. Root is a car insurance company in America. Next Insurance sells small business, SMEs, insurance policies in the US. Lemonade, some very few places around the world, and Alco is very well known. And you can see from Alco in India how you are more and more growing the amount of insurance policies that are being sold online. Now, after this is what's going to happen post-COVID? Well, we have to look at China. China is ahead of us in terms of COVID, and we can definitely see that the behaviors are here to stay. The amount of online order deliveries, smart POS with QR reader, contactless delivery pickup, ticketing without kiosk, or contactless restaurant ordering are all-time high, and they have never gone back. Fintech platforms are becoming a lifeline, where before they were just one more player in the ecosystem. They are now in certain countries around the world. They're becoming the way that governments are using to give money out to help people in consumers and retails. In the US, banks like Cross River Bank became one of the top 10 banks in helping the US system lend money to small businesses, and they have no branches. Every other bank in this network, in this chart on the left, has at least 500 to 1,000 branches. Chime, Cash App, Square, they were all used from the government as a way to give money out to people. In China, the fintech lenders were showing and demonstrated that they were resilient, that no matter what was their way, people were still willing to pay back their loans. And this is the data from China, and we could see the same in the US with the online lenders. And even in India, there was, for a moment, on the first few months, it was a little bit more critical because there was a moratorium in the system, as you all well know. But as you move forward, people were willing to pay back, and the fintech companies were having a better payback ratio than most of the incumbents. Now, the way that people are using their money and using online wallets, it's also creating new behaviors on shopping, and it's also creating new behaviors on borrowing. Buy now, pay later is becoming a bigger trend worldwide. It is not just a trend led by the Zest or the Creds in India or the Bharat Pays to the merchant. It is a trend that is global, with the Klarnas and the Affirms and the Shopify's and the Afterpays, and they're all growing massively with the concept of buy now, pay later. This is probably the first real use experience of a lender product online, where the experience matches what you expect from as a consumer in the way you pay for stuff. As a second bigger trend that we see is the digital trends of financial services in a post-COVID world are the digital first. Everything is becoming digital first. No one can just survive on being completely physical. COVID has increased the demand for software. And no matter what kind of merchant you are, you need to have an online acceptance. We're seeing this in merchant pay processing worldwide. In Europe, companies like SAG, like Salt, Pagos a Distancia, which is Clip in Mexico. We're seeing the same in patient engagement and payments around Cedar or auto repair. So no matter where you go, every software company is now embedding payments and checkouts in their experience. And that's why Razorpay will become the leader in India, because it's becoming a normal factor for any software company to offer. The same trend is happening worldwide. We're seeing the same in no matter if you look at if you're a catalog app or you're a ledger app or you're managing invoicing or a fleet management company, all of them are simply embedding more and more of financial services. And that is the second big trend we're seeing worldwide. The moment where you are embedding financial products into other experiences that do not tend to be financial by nature. The SMB software platforms are pushing this. The number of products that the platforms are enabling is just growing. Most of them were only doing ledger. Now they're doing payments and lending and checking and offer payrolls and provide insurance, and they manage your cash and they manage your bill payments. So no matter if you're talking to the Shopifys of the world or Toast or the Mercado Pagos or the Brexes of the world, they are all adding more and more of these products as the system is becoming much more embedded. So it's going to be a one-click API where you can get all these services. The incumbents are Death Stars from the Star Wars analogy. They are trying, they're fighting, and the way they should. And their success today is they've built new experiences on the traditional services with new brands, trying to mimic some of the fintechs, but the results have been okay, not great. Only a few have been able to really break out. Most of them have not been able to get really out there. Now, what's the bigger problem for them? Most of the incumbents are going to spend the next 5 years shutting down branches, because what COVID has shown is that, guess what? Branches are not that needed. They're important. You may need them for certain things, but they're not indispensable. And so as the incumbents have to hire consultants to go figure out how to shut down branches, the fintech companies have an open room to grow. In China, 840 branches were already closed. 90% of all banking could be done online. 95% of all retail banking can be handled by your phone. These are very clear signals. In the US, it is the number one priority of all banks, which is to shut down branches. They overbuilt, they have too many, and now they realize that they don't need them. Now, some other banks have become much more smarter about adopting financial products. In the case of Russia, Sberbank, which is the largest bank in the country, they control 50% of the market share, choose to change their name to Sber, take out the bank, and become a technology company and offer much more of a experience, a destination. And their market cap has tripled because of it. Now, very few banks are capable of doing that. At the same time, enterprises are permeating to financial digital transactions in ways that we hadn't seen before. And that's crucial here. Because it's not only the WhatsApp for Business or the enterprise WeChat, it's the amount of people that are actively using embedded technology to serve big enterprises. It's becoming then a waterfall, which is affecting the way people do mortgages, or they do notary services, or they do escrow services for real estate. In America right now, a third of every home that has been sold or bought this year has been completely done online, the entire experience, without even visiting the house. That was a non-possible scenario 12 months ago. Banking software is finally on the cloud. For the first time worldwide, we're starting to see that the banks are allowing cloud services companies to white label solutions and offer banking services. In India, we all know in the next 6 months, we'll see a group of startups offering banking services on the cloud or on the phone from a digital perspective. And that is the same phenomenon we're seeing with B2B payments, we're seeing with financial document data, or any other KYC or AML worldwide. And the third one, and actually my personal favorite, is decentralized. And this is not just about crypto. It's a decentralization of the workforce. Companies are working remote more than ever. And there is a debate if this is going to stay or become a pattern, or people will go back to the office. Personally, I think we're going to go back to the office. We miss it. We miss the environment. We like to be around our friends. It's not fun to work at home every day, 24/7. But there is a component of remote workness which is here to stay. The best companies are going to be able to recruit people no matter where they are in the world, because for one way or the other, they figured out how to be remote. In this remote environment, one of the stats that we run at Ribbit was to see how many updates did companies do over the last 12 months. And if you can see on this slide very clearly, fintech companies were capable of doing almost weekly updates the last 12 months, while the incumbents were stuck in once a month. And this is why we're winning that battle, because we're capable of adjusting faster, we're capable of bringing more and more services to our consumers in a faster, more prevalent way. And the shift is creating companies in areas that we did not see before. Faster companies like TrueWork, which are doing faster employment verification, or payroll for remote teams, or health insurance for digital nomads. These are business lines that did not exist before COVID. And now they're becoming a regular trend in the business world. Now, it wouldn't be a Ribbit presentation if we didn't talk about crypto. And as you all know, we've been very big fans and followers of Bitcoin and crypto assets. And in the last 9 months, we have seen the most demand for crypto that we had seen worldwide. If you measure in US terms, Square public release numbers, or Grayscale, which is the only ETF listed in the US market, or if you measure the number of companies that have announced that they've bought crypto for their treasury management over the last 6 to 9 months, the numbers are staggering. So for the first time in a decade, we're seeing Bitcoin being used not only for retail, but only for an institutional and also corporate in ways that we haven't seen it. The amount of P2P Bitcoin volumes around the world in every single emerging market economy are growing very fast. And here are examples of 4 different regions, 2 in Africa, 2 in Latin America, on how that's happening. Decentralized finance, or DeFi, is the phenomenon of 2020. DeFi is an asset category that did not exist a couple of years ago. It was all the theory of building smart contracts on top of Ethereum. And what we've seen in 2020 is a rapid growth to almost a $25 billion system that was zero barely 2 years ago. The number of people using it is roughly 100,000 people. So we're very early stage in this. But you're starting to see protocols around lending, swapping, yielding, that are just having staggering number of people working and being involved. Now, the potential here is immense. It is probably the most asymmetrical risk you can find in fintech worldwide. Ethereum is a way to reflect that bullishness that is going on. But as this protocol becomes more established, the interconnectivity and the interoperability of the network effects are insane. I am willing to say today to all of you that Bitcoin and DeFi will become the interoperability OS behind wallets worldwide. Most countries, most companies will have their wallet, and the interoperability system will be probably Bitcoin and DeFi as we move on. And the key open questions on regulatory are getting clearer every day. Every year, we've advanced in this. That's one phenomenon of this decentralization. The other one happens to be the stock market. The influx of liquidity on the global stock market is on fire. You all know it. It's happening in India. It's happening in America, in Brazil, in Mexico, in Europe. No matter where you go, you're seeing a phenomenon. And what is going on is that we are in the beginning of a new generation of equity investors. The millennials, people who were born after 1985, are becoming equity investors worldwide. And the reason for this is because rates are coming near zero. Maybe a couple digit points, maybe 5% in India, maybe 2% in other countries. But compared to historical rates, we are at the all-time lows worldwide. And when we're there, the consumer, all of you, all of me, myself, we think about how to invest our money better because we don't want to get a fixed yield anywhere. So as interest rates go down, the amount of equity investors goes up. And this is a monthly number of active investors worldwide. US, India, Russia, China, Hong Kong, Indonesia, Brazil, no matter where you are, we are 2 to 3 times more retail oriented than we were 5 years ago. And most of these people are starting to do this online. Companies, and the amount of time that people are engaging in these services is hitting all-time highs. Maybe it's a pandemic and you're stuck at home, so you spend more time trading. Good for you. But the reality is that it is much easier than it used to be before. So in summary, what's important here? We're seeing new payment networks that are being built like UPI and Pix in Brazil and fast payments in the US, which are completely being built for a cashless world. They will bring new use cases that we're not used to. We are seeing now the power of native lenders. They will scale. They will create business models that we have not even imagined before, use cases and experiences that we are becoming visible to the user, but will make their life easier. We're seeing fintech companies embedding their software into other non-fintech companies and empowering others to do a much better job on financial products. We're seeing a world where there's no yield, and the common saver investor is forgetting the term bonds or fixed income, and they're becoming much more active with their money investing in equities. And we're seeing a world where it's moving much faster to scale in a decentralized matter, where competition for talent is global. It's not anymore about hiring people in one country or in your city. It's hiring the best people no matter where they are in the world. So as all of this is happening, I do want to leave you with one message, and I'm happy to open to questions. But the change always happens slowly and then suddenly explodes. And in this year, when the market cap of the big banks have lost more money than the market cap of the fintech companies have generated, it's an example that we're just underway on our journey. If you think about this, it is less than 10% of the market cap worldwide is being run by digital native companies. We expect that number to be 50% by the end of this decade, at least, or more. So let me turn off the screen share. And I'm happy, I don't know if we have more time, but I'm happy to answer any questions you guys have.
All right. Thanks, Micky. I don't think there are any Q&As right now. So we'll just move on with the contents. Thank you.
Well, it's been my pleasure. Good luck with all of you. Thank you for listening, and good luck to FTX and Razorpay for putting this together and for having me here.
All right. Cheers. Very happy to have you here.
All right.